Hi, everybody. Hope you're doing well. Today, we're going to cover the QQQ guidance for December 14th, 2020. For brevity sakes, we're just going to call it the Qs. If you like this content, please like and subscribe. And for background, Prep to Grow is an AI big data company that tracks company performance. And that performance typically has a correlation to stock or option price. So let's just jump into it. So last week, we predicted that it was going to be a bear, so the week of December 7th. It started off strong, but certainly this week has fallen down. Next week, we believe it's going to continue to go through the week. Based on the data that started to show last week, the data is showing that there's about a 5% pullback for the Qs. We're probably halfway between that. So this week it dropped about 1% to 2%, made some recoveries towards the end of Friday, but for the most part is halfway between a 5% pullback over the next 2 to 3 weeks. Primary reasoning is it broke its 52-week high, but it's now certainly under it, but it's close. So it's having a hard time just breaking through it and finding a base for it. Macro conditions continue to be problematic, would be a dramatic understatement. I say this every week. We can't talk about certain things because our videos get banned. So it's obvious, some shutdowns, a whole bunch of other stuff. It's just the macro conditions are not favorable. We're in the December slowdown anyways. It hasn't started off slow within December thus far, but this week it started to slow down. Next week and the following week with Christmas coming up, we think it'll continue to slow down again, halfway between a 5% pullback over the next 2 or 3 weeks. So who's announcing? It's an odd one, Paycheck. They were originally targeted to announce December 16th. It got moved to December 23rd. It's odd because December 23rd is a pretty odd announcement date. This is their Q2. Prep to Grow has been tracking them since February 2017. If you don't know who Paycheck is, they're an HR payroll and benefits provider, primarily for SMBs. They're $1 billion in revenue. In that space, it's very solid because it's an incredibly crowded space. Intuit, ADP, a whole bunch of others are in the space. They definitely are not as well known as an ADP, Intuit, or Workday, but they're a solid company with $1 billion in revenue, and for this kind of space, it's very solid. However, they're feeling the macroeconomic conditions and probably more competitive pressures. Over the last year, their earnings and revenues have dropped. Analysts have dropped them. So we don't really see that improving over the short to long term. They did bounce up in their Q1 a bit, so they may have some good numbers in Q1 that were previously downgraded. But we'll see. Certainly, if we look at where they are today, they're starting to pull back. And if you look at the red box over in the corner of the graph, whenever you see that disparity between growth and stock price, invariably there's a pullback. We saw that last week with the Qs, early stages of it, where we started to feel that with that data, there's going to be a 5% pullback. When we see this kind of data, certainly think there's going to be a pullback soon for Paycheck. Generally, we have a pretty good accuracy of Paycheck, 86%. Not great, but good enough. Analysts did up their stock prices, which hasn't happened in a bit. Stock went up about the same percentage. But again, with Paycheck, their Q1 may be decent to okay. They're with readjusted revenue guidance. Their Q2 not looking too good. Wouldn't be surprised if they don't give guidance or readjust guidance. So let's move into unusual activity for options. So let's jump into the application itself. So this is the Prep to Grow application. So we're just going to filter for unusual option activity. So it's pretty straightforward in here. So we're going to look throughout the week. We're going to look at the volume to open ratio, and that'll be the primary driver. And then we're going to apply those filters. It's about 14 that we look at from like the high tech sector. Let's get a bit of a consolidated view. So if we go down the list, Tesla is a good one. For the February 19th expiration at 610, costly puts at $8,000. So let's take a look at it. We thought this was a pretty good call. We actually made this call last week to our subscribers. We sold it off yesterday, I believe. Made good profit off of it. So it was a good call. Other people saw it as well. About 10 to 1 if you look at this. Or 6.9. So it was a good call for some folks because it did drop throughout the week. If we look at the 5-day, it started off strong, go up. At this point, we started to get worried that maybe it got miscalled, but then started to collapse. Down all the way down to I think 570 something. Yep, 570. So it was a good call, 610 call. Or it was a good call on making a put for this. We made the same recommendation last week, so certainly made some good profit out, and hopefully our subscribers did as well. Let's take a look at one more as a call. So 2U is another one for the December 18th expiration date at the 25 strike price for a call, and the volume to open interest rate is 12.5, which is large. We felt this had a decent success rate, 72%, slightly better than flipping a coin, but good enough to make a bet for those that are more less risk adverse. So 12,000 volume to a typical open interest rate 9.95. So this recommended December 7th. We made the recommendation. And let's look at the 5-day. I know it went up quite a bit throughout the week. Started off, pulled back, and then bounced up. So on the 7th, I don't know if they bought on the 7th, certainly as it's high, they made about 10% on the stock price, which was good money, especially if you're making a call this close of expiration date. So yeah, good buy for some folks, made good money. It was good week for 2U and those call option buyers. So let's jump back into the prediction for next week, December 14th. 30-day growth. And this is a prediction chart and a growth chart for the next 30 days. We see the continuation of the pullback, halfway between a 5% pullback. We see it starting to go up a little bit at the end of the week, but not enough to come to level. We should see leveling probably next week to the week after that. But again, just finalizing a 5% pullback. Forecasted revenue EPS, and this is from the analysts. They gave them a price bump this week for the Qs. Last week it was about 26 billion in forecasted revenue for the FAANGs. It's now 27. It was 2.2 last week for earnings per share. It's at 3.1, so they're expecting better with some new information. We kind of agree with that. Long term, looking good. We always separate FAANGs for others for this primary reason. So 27 billion for the FAANGs versus 5.3 billion for non-FAANGs. So the FAANG, if you don't know, for the Qs make up 65% of their total holdings. They're the obvious ones: Tesla, Amazon, Facebook, Google, so on and so forth, right? 27 billion in revenue is good, and that's why we separate these two, so we have a better understanding what's happening. Paycheck is a good example of an other or a non-FAANG. Doesn't matter if they go bankrupt next week, which they won't. They're a solid company, but just saying their performance will have very little influence on how the Qs perform. Google, Amazon have a bad day, will hurt the Qs because of the holdings. So just when you look at this, be aware of that fact. If we look at the long option volume, calls have fallen off for the FAANG still. Haven't really recovered yet. Could be money just pulling back because of the potential overvaluation of them. We think Q1 is going to be good, better than the beginning of this year pre the macro conditions taking effect. Others, stable. They've been stable throughout the whole year. FAANGs, calls versus puts. So we say them pretty stable. Not much movement, some growth, but the FAANGs have been the most volatile. So long volume, option volume, still looks like they're going to pull back on the FAANGs, maybe because of overvaluation, but we'll see what happens. 30-day bear versus bull. This is why this, in conjunction with the data we show around growth, the stock price, the pullback, uptick in puts versus calls. and FAANGs influence the Qs more than anybody else. Others, there's a drop in the puts and an uptick in calls and stock recommendations, but won't have nearly as much impact as the FAANGs pulling back. So continuation of the 5% pullback, about halfway between that. If we look at the predicted stock price, you can see this. Others are pretty stable, not a lot of movement up and down. FAANGs jump all over the place, depending on who's announcing and what they announced. But pretty flat. We see recovery. Again, January recovery, you should start to see these stock prices influencing. In summary, Qs are halfway between a 5% pullback. We think the continuation, or the data shows that the continuation will continue next week and probably the following week. But if you like this content, please like and subscribe. If not, have a fantastic trading week, and we'll talk to you again after the holidays. Take care.